Welcome everyone. I'm excited to kick off today's presentation on the Manufacturing and Infra First Budget for India. Today, we'll be exploring the Union Budget for 2026-27, along with the latest market outlook and some top stock picks. Over the next few minutes, I'll walk you through the key highlights and what they mean for investors. So, let's get started and dive into the details. Let's start with the core equation. Big capex plus fiscal discipline equals a long-term bullish outlook. Essentially, when we see substantial investment in capital expenditure alongside responsible fiscal management, it signals confidence in long-term growth. Now, despite some concerns, the fiscal deficit remains at 4.3%, which maintains our credibility with investors and markets alike. This balance between spending and discipline is key to sustaining investor trust. Moving on, a significant rupee 2 lakh crore in capex is planned, and this level of investment is crucial because it directly enhances earnings visibility. It shows that the government is investing in infrastructure and growth drivers, which can lead to better profitability over time. Another important point is the recent SDT hike. While it might cause some short-term pain for traders in derivatives and F&O, in the long run, it could lead to a healthier, more sustainable equity market by reducing speculative excesses. Finally, looking ahead to the Budget 2026 macro view, these elements, big capex, fiscal discipline, and market reforms, set a positive tone. They reflect a strategic approach aimed at fostering sustainable growth and stability in the economy. This aligns with our overall theme of building a resilient, long-term investment environment. Let's start with the idea of following the capex, or capital expenditure, and how it directly correlates to the performance of stocks. When we see substantial investments in infrastructure, especially in freight corridors and railways, it often signals a healthy economic outlook. These sectors tend to dominate spending because they are critical for logistics and supply chains. Now, the Risk Guarantee Fund plays a crucial role here. It helps reduce project delays by providing safety nets and encouraging quicker execution of infrastructure projects. This, in turn, boosts investor confidence and accelerates growth. Moving on to stocks, we see L&T leading the charge as a major player in infrastructure development, showcasing its strength and stability. KNR, on the other hand, is a mid-cap stock with high growth potential, making it an alpha opportunity for investors looking for outsized returns. And of course, infrastructure is truly the engine driving the economy forward. It powers development, creates jobs, and ultimately fuels broader economic growth. Recognizing these connections helps us understand why infrastructure investments are such a vital part of our overall strategy. Let's take a closer look at the shift from being importers to becoming exporters. This is evidenced by an allocation of 7.85 lakh crore, which highlights a strong structural trend towards self-reliance and boosting our export capabilities. Additionally, the MRO duty waiver plays a significant role here, as it helps stimulate our private ecosystem, making it more competitive and encouraging growth in maintenance, repair, and overhaul services. Furthermore, the involvement of key players like HAL and Bell provides us with multi-year order visibility, which is crucial for planning and sustaining growth over the long term. All of these factors align with our broader focus on defense and aerospace, sectors that are not only vital for national security, but also have immense potential for boosting our economy. So, in essence, this slide underscores how strategic policy decisions and key industry players are driving us toward a more self-sufficient and export-oriented defense and aerospace sector. Chips are the new oil, meaning they're becoming just as critical to our economy and technology as oil once was. With the ISM-2 initiative and a substantial ecosystem support of 40,000 crore, India is really pushing to build a robust semiconductor industry. This support isn't just for design, it's also for manufacturing, which is crucial because both aspects need to grow together to create a sustainable ecosystem. Companies like Dixon and Keynes are leading the charge, exemplifying how PLI schemes can really accelerate growth and make India a global player in this space. Their success stories show how targeted support can lead to significant scaling and innovation. And when we talk about semiconductors, India is betting big. This isn't just about meeting domestic demand, but positioning ourselves as a key player in the global supply chain. So overall, these points tie back to our broader theme. India is strategically investing in chips and semiconductors to harness the immense potential of this industry for future growth and technological leadership. Let's take a closer look at how policy support and pricing power are shaping the landscape. First, it's important to recognize that nuclear and rare earths are now considered strategic resources. This means governments are likely to prioritize their development and ensure stable supply, which in turn boosts the strategic importance of these sectors. Next, we see biopharma company Shakti making significant strides by boosting domestic APIs. This is a clear move towards self-reliance, reducing dependency on imports, and strengthening the local pharmaceutical industry. Now, on the cost front, Sun Pharma and Cipla are gaining a real advantage, thanks to their strategic positioning and efficiencies. This gives them a competitive edge, especially in an environment where cost management is critical. Finally, I want to highlight that energy and pharma sectors are emerging as silent winners in this landscape. They may not always be in the spotlight, but their strategic importance and resilience position them well for future growth. All of these points tie back to our broader theme of how strategic policy and pricing power are fundamentally reshaping the competitive landscape. All right, so let's take a look at where the money is actually going. This slide is all about breaking down the allocation of funds. You'll notice that understanding this distribution is key to seeing how resources are prioritized and managed. First, you'll see that a significant portion often goes toward operational costs, things like staff salaries, technology, and infrastructure. These are the essentials that keep everything running smoothly. Next, we have investments in growth initiatives. This includes marketing, research and development, and expanding into new markets. These areas are vital for long-term success and competitiveness. Then, there's also a portion allocated for contingency or reserves. Having a safety net ensures stability during uncertain times. Connecting this to our overall theme, knowing where the money goes helps us assess how effectively resources are being used to achieve our goals. It also highlights areas where we might need to reallocate funds for better impact. Understanding these financial flows is crucial for making informed decisions and ensuring transparency and accountability. Now, let's take a closer look at the allocation of the budget across different sectors and the top stocks to watch within each. Starting with infrastructure, which has the largest share at 12.2 lakh crore. This sector is critical because it underpins economic growth and development. The key stocks here include L&T, KNR, and RVNL, all major players with significant project pipelines. Moving on to defense, which has a budget of 7.85 lakh crore. This sector is gaining importance with increasing focus on national security. Top stocks in this space are HAL, Bell, and Mazagon, known for their defense manufacturing capabilities. Next, we have semiconductors, a rapidly growing and strategically vital sector. With a budget of 40,000 crore, this sector is crucial for tech innovation. Notable stocks to watch include Dixon, Tata Elxsi, and Keynes, which are leading players in semiconductor design and manufacturing. Finally, there's biopharma, allocated Rupee 10,000 crore. This sector is essential for healthcare and pharmaceutical advancements. Key stocks here are Sun Pharma and Cipla, two giants with a strong global presence. This cheat sheet provides a snapshot of where the government is focusing its investments and which stocks are poised to benefit from these allocations. Keeping an eye on these sectors and stocks can help us stay ahead in understanding market trends and opportunities.